Hello and welcome. You're watching First Stick here on News 9, where we bring to you the morning buzz on the Lal Street. I am Sayash Maheshwari, and with me in the studio, as always, is Amit Ranjan. And it's a Friday morning, fresh start to both a new series and a new month, in fact. And I mean, contrary to the recent trends, the February series has actually, brought some positive momentum to the markets. Nifty has seen a robust gain of about 600 points, whereas Nifty Bank, surged nearly 1,000 points. Now, the cautious sentiment that was prevailing in the market was largely due to absence of any significant triggers and, some bit of instability in global equities ahead of key data releases. However, that concerns seems to be dissipating now. We have a slew of important events lined up, including the auto sales numbers, which will begin to trickle in shortly, and we also have the PMI numbers that will come out later today for India as well as US and other Asian markets. But before we delve into all that, let's take a quick check on what we got in terms of a handover from the global markets. Amit, over to you.
All eyes were on the personal consumer expenditure PCE price index, and it came as expected. Inflation in the US declined to 2.4% on an yearly basis. The core PCE price index, which excludes food and energy, rose 2.8%. Matching the estimates by analysts. Other details on the report showed that personal income grew 1% in January, while personal spending rose 0.2%. Augurs well for the economy. Dow Jones closed in the positive at 0.12%. S&P 500 closed in the positive at 0.52%. Nasdaq closed in the positive at 0.9%. Stocks closed flat at 0.00%, neither up nor down. Hang Seng this morning is in the positive at 0.77%, and Nikkei is in the positive at 1.72%. Curiously, the stock that was providing a cushion to Nasdaq few days back, Apple, was in for some correction. It closed in the negative at 0.37%.
All right, but apart from Apple, I think a good bounce for the US markets. I think S&P is at all-time high back again. And a very strong start for our markets as well. Indian markets have not only reclaimed 22,000 levels on Nifty, we are in fact above 22,100. In fact, if you look at the numbers, it's a sea of green out there. Nifty is up almost 0.6%, in fact just a tad bit over it, and we are currently above the 22,100 mark, and Sensex is also moving towards that 73,000 level, which it had broken below just 2-3 sessions before. The broader markets, we were talking about some froth building up over there. They have bounced back. In fact, if you look at the rally yesterday, I mean, the broader markets were led the charge in that recovery, and they were able to bounce back and in fact close in the green as well. In fact, even this morning they are trading ahead of the headliners. Both indices are up somewhere around 0.5 to 0.75%, mid cap and the small cap indices, that is, and volatility is easing. And Amit, we have been talking about how India VIX has been near that 16 levels, but we are back around that 15 sort of levels, knocking around that the long term average of around 14.5 15 levels. But of course, the big trigger was India's GDP numbers that came out, and that came out at around 8.4% for the October-December period, and that was the fastest pace seen in nearly 1.5 years. And in fact, it beat all estimates, because I was reading some of the brokerage reports and what they were putting forth before the release, and they were expecting a growth of somewhere around 6.6%. The number came in at 8.4%, so massive beat over there. And on top of it, we have had revisions and forecasts as well. For FY24, estimates have been revised upwards to 7.6% from 7.3% earlier, and for Q1 and Q2, revisions have been made from 8.2% and 8.1%. But with that, let's also bring on board Mr. Rohit Srivastav, founder and market strategist at IndiaCharts.com. Mr. Srivastav, thank you for joining us here on News 9. And I mean, you have been a voice of caution, and had we spoken yesterday around the same time, the overall texture of the market was looking rather jaded. Nifty had broken below the 20 DMA, which has been a critical support for the index, and the chatter of froth building up the broader markets was getting mainstream attention. But There's clearly is a big shift in sentiment, since yesterday. India's GDP growth numbers that came out, of course, was a big trigger, and on top of it, the PCE numbers, the inflation numbers in the US, that came in line, and I think that of course, also has eased some nerves that were building in the global markets, and Nifty is back above 22,100. What's your sense of things? Is Nifty out of the woods again?
So I'll not completely throw caution to the woods. I'll still keep some caution on the table because we haven't seen a significant correction across stocks, especially where a lot of the buying was or which was moving up one way. For example, the PSU sector is one example. We've seen some correction, but I wouldn't say it is meaningful yet to say that we have done enough in terms of reducing the near-term froth. And also look at the expiration yesterday. This was one of the largest expiries because you had the highest futures open interest on record happening at the end of this expiration, and that was sort of partly behind maybe some of the pressure that you could see. And we've seen a normal rollover, 80% of index futures getting rolled over, which is completely in line with the historical average. And people are paying around 160 points to roll over index futures, which is sort of again the top end of the range. So it all signals that there is excessive bullishness still in the market. Does that need to correct? Can be a debatable question, but I think there is room for it, and we should still keep some caution in. We've sort of priced in a lot of stuff, whether it's weakening inflation data, which is not new, it's been happening for quite some time, or whether it's the outcome of the general elections. All of that has been getting priced in. So somewhere there's room. I think there's still room for a knee-jerk reaction. There would be an election rally probably post some kind of a pullback, but one should be prepared for some kind of pullback.
All right, and March has historically been a down month for the markets. In fact, if you look at data, 3 of the last 4 Marches have been in like red months for Indian markets. And I mean, how is the setup looking this time around? Of course, there is caution, but what are some of the key triggers that you will be tracking for this series? Because we have a action-packed month, Rohit.
Yeah, so it's typically Jan, Feb, March, which is the seasonally bearish period, and Feb is usually the worst. Now, this time we've actually seen Feb do better. We've closed up 1.2% for the month, and that leaves us with watching whether March would also turn off and follow the seasonal pattern, because Feb did not. Jan slightly did. So it's open. It's an open case. It's also the year end because it's the last month of the financial year. So there is again like a seasonal case for profit booking into the year end. So that is why we'll keep those alternates open for something to happen, and probably that would provide us, with better opportunities.
Good morning, Rohit. Rohit, now the personal consumption expenditures price index of the US came in yesterday, and inflation declined to 2.4%. Even the core PCE price index was at 2.8%. Not very far from the 2% that the US Fed is targeting. Do you expect the Fed cuts to happen sooner than June, now that these figures have come in?
So you see, the data is changing all the time. Just 2-3 weeks back, you had other data which was then pointing that inflation has jumped, and then bond yields also spiked, and all of that happened. After that, data has cooled off a bit. Then you're thinking about whether things will happen sooner. So I think it's basically too early to make that judgment call. We are still watching what bond yields do or the dollar does. For example, bond yields are still at 4.2%, which means they're not really indicating any downdraft immediately, not even on yesterday's data. You have not really seen bond yields drop pretty significantly. If that had happened, you could have made some sense of, okay, now markets are beginning to think of yields going down, but they're still not thinking that. So I think we're still awaiting other data points to come in month after month to get that idea. There's also, the US large borrowing program because of the debt that is consistently increasing. Remember that a lot of the growth that we are seeing in India and the US has been driven by government spending. And somewhere that can also trickle into some degree of inflation. So that is the risk that, bond yields, while we want them to go down, because you have a large borrowing program, it's not going to be an easy course unless you're really going to go back to bond buying all over again. So we are still in QT mode. We are still not gone back to QE. And as long as that is true, expecting bond yields to decline very, very fast is I think, overdone right now. The risk really is that bond yields start rising further. They've already picked up from, they'd gone down to 3.8. Now they're stuck at around 4.2. What we are watching out for is, do they stay here? Do they hedge higher? Can we actually go towards 4.5, 4.6? And that would then again get, perceived as a risk in markets.
So there's another curious case of China from the global. The economy is slowing down, but money seems to be pouring in, and China state-backed funds have poured in more than 410 billion yuan, almost $57 billion, into onshore shares in a bid to prop up the markets. Now, why do you think money is flowing into the Chinese markets while all indications, whether it is their real estate or their manufacturing, are indicating towards slowing down? What is this conundrum? Can you explain it for our viewers?
And are there any green shoots of recovery that the investors are perhaps banking on? Because of course China is available at a significant discount. In fact, half of what Indian markets are trading at. We are trading at a PE of about 20 times earnings, whereas they are available at about 9 PE of 9. Rohit.
Yes, so you've sort of hit it on the head. Valuations become one of the primary reasons why you buy a market at the beginning, and so China is in the value zone. So that is the first reason why it will attract money, is that a lot of value investors will step in and want to buy at these low prices. And you never get stocks at low prices on good news. I mean, you cannot say that Chinese economy has turned around and you'll get it at eight times earnings. It doesn't work that way. Just like the Indian market today, you're just getting the best GDP data and you're close to all-time highs. It was not possible that if you got 4.8% GDP data and you'll be at all-time highs. So good news is always at the top, bad news is always at the bottom. And that is how you have to use information in your favor. And I think that's what the value buying is. But remember that there was also a stimulus by China a year ago or 2 years ago. Their markets did rally and then they gave up on that. So one, there is a short-term trigger. Okay, fine, they're stimulating. There's a case for value buying. Is it sustainable over a period is a completely separate question. But it does create a short-term trading opportunity, from a couple of months perspective, where Chinese stocks can do well because they've fallen too much.
All right, Chinese stocks can do well maybe in the short term, but more needs to happen on the ground to see a fundamental shift. That's a word coming in from Mr. Rohit Srivastava. Sir, great insights from you as always. Thank you for joining us here on News 9.
Thank you.
But with that, let's take a short break. On the other side, we'll be joined by Kush Bora, founder of kushbora.com.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When you look at audio in general, we had music, which is like extremely old format, and then we had podcasts.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
The lab-grown diamonds are not mined
and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News 9 Plus. Download now.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
Welcome back. You're watching First Stick here on News 9 and the markets. Now, I mean, what a tremendous recovery they are staging this morning. Nifty as we speak is very close to its day's high. In fact, it's moving towards that 22,200 mark. Yesterday, we were talking about this caution building up in the system and how, there could be some bit of a correction in the offing had Nifty broken below the crucial support levels, which came in at around the 21,950 mark. But not only did we respect those levels on a closing basis, we were able to take cues from there and rise higher. And if you look at the recovery this morning, tremendous recovery. Nifty is very close to the day's high, as I mentioned. Sensex is back close to 73,000 level. I think it's back above 73,000. The broader markets, they are turning the corner as well. And across the sector, there seems to be some bit of exuberance building up. Of course, the GDP numbers that came in better than expectations is, adding to that rally as well. But to understand, how much the markets can go from here on, let's also bring on board our technical expert, Kush Bohra. Kush, thank you for joining us here on News 9. I mean, a very strong start to the March series. Just yesterday, most of us were talking about, it's perhaps time to be cautious. But clearly, the impulse should have been to buy on dips now, isn't it? Because that strategy has worked out beautifully over the past few weeks.
Hi, Suyesh. First of all, a very good morning to you and to all the viewers. And that strategy has been working so beautifully. But let me also add one thing here. I think, a couple of things that have got missed perhaps in translation. For a while now, Nifty's had those, 200, 300 point kind of moves, across the month, maybe, even lesser. Back in that time, the volatility was perhaps 11, 12, 13 at best. And, that's the kind of volatility India VIX number that we were seeing. Off late, the VIX has spiked up to 15, 16 kind of levels. What's happened is that the range on the Nifty has now expanded from about 2 to 300 points to about 5 to 700 points. And that's the kind of move that we are seeing. Because a lot of us are not used to, that kind of a big move, at least on the downside on the market. Every big dip seems like, the supports are taken out and, perhaps we could head lower. But the market continues to surprise us on the positive side and, a bounce emerges. So what I'm saying here is that the range is expanding, the volatility is going higher, but the buy on dip strategy is very much intact. The markets are on an upward trajectory. The recent highs have only been incremental, but I think once we take out the 2250, 22,300 kind of zones, I think 22,500 is a very convincing target on the near term, and we've maintained that for a while. So buy on dips will continue, as a strategy, and with the expanded VIX. Traders and investors will perhaps just have to learn to live with the higher volatility and the expanded range.
All right. And what's your view on Nifty Bank? I mean, clearly, at least this morning, it's leading the charts. It's up about 1% or so. And we have almost seen a V-shaped recovery. We lost about 800 points in a matter of 2 sessions. We have recovered all of that back very close to 46,600 levels. as we speak, Kush. But I mean, is this recovery sustainable here? Because we have been talking about it weeks on weeks, but Nifty Bank really, is not able to sustainably move upwards.
And yeah, I think the key word there is sustainably, right? I mean, we saw a stupendous run where the Nifty, from about 45,000 levels ran up all the way to about 47,300, right? So a good 2,300 points kind of an up move. And then it again gave away some way, right? I think here the move is not as convincing. How I would play Bank Nifty is live by the day. Go by the day. Whatever the trend is for the day, you could perhaps just be a participant in that trend. And if really that's not your strategy or your style, it's best to avoid Bank Nifty. It's not really as convincing an up move yet. Even today, if we see the 50-day moving average, which is close to 46,700, 46,800 kind of zones, that's proving as a resistance. So I think here there is some still pressure left. However, we do maintain that 48,000 is a target that the Bank Nifty could see in the coming weeks, perhaps months also. But the move here is not as convincing. So we'd perhaps be best avoiding it if you can't really handle all this kind of volatility here. So Bank Nifty for sure under pressure, not as convincing as the Nifty up move. So if I have to pick one of the two, Nifty would be my pick.
All right, and I mean, we are looking at the sectors on the screen. Most of them are trading in the green, but one particular pocket of the market, is feeling some bit of a pain. In fact, since yesterday, is that the pharma space and specifically hospital stocks. I mean, there is a Supreme Court order out there. I think they are planning to, put a cap on certain charges. I mean, Amit over here, please tell us all about it.
Not a cap as yet. There was a law that is a rule that was framed 12 years ago, and the Supreme Court has criticized the central government for its failure to enforce that law, in which the range of rates needs to be specified. There was a public interest litigation that was filed by the NGO Veterans Forum for Transparency in Public Life, where it found out that government hospitals and private hospitals had a huge disparity in the range of rates. Now, after this criticism by the Supreme Court, market capitalization of hospital stocks went down by 16,000 crores yesterday. And I'll just take you through the stocks that lost, how much they lost. Apollo Hospitals just yesterday lost 3.84%, Fortis 3.44%, Global Health 4.34%, Max Healthcare as much as 7.46%, Artemis Services 2.05%, Rainbow Children's 5.47%. The list is long. I mean, I've just taken the prominent ones. And if we look in contrast of what the gains these very companies have given in the last 1 year, just look at that. Global Health gained 175% almost last year. Astra DM Healthcare 114.88%, Artemis Medical Services 163.59%, Apollo Hospital even that 39.02%. So in just 1 day, a huge amount of loss happened in this sector.
And I mean, that continues even today. I mean, yesterday investors lost nearly 16,000 crores because of this correction that we saw in the hospital stocks. The pain continues as of this morning. Stocks
across
are down.
The board. Some have gained a little, but most of them are still down. I mean, Max is still down by 8% almost.
Max is down by about 8%. Your other hospitals like Apollo, it's down by about 2.5% or so. Kush, what's going on here? I mean, is this sort of a correction even justified?
Or is it just a blip because of the Supreme Court thing? If something has not changed in the last 12 years, do you think this downturn is going to last, or it's just a blip?
So traditionally, if you see historically, rather what you've seen is that these kind of announcements have turned out to be buying opportunities because after some course correction, it's business as usual. So for me, this will be a buying opportunity. The only thing here is that I'll wait for the fall to settle. Now, the stock that I have on my radar, Rainbow Children's, Medicare is the first one that we've been, suggesting for a while now. Had gone into a bit of a consolidation mode, and it's again back to that consolidation level after the spike. So for me, that's one stock that will be on my radar. I'll look to buy Apollo Hospitals too. But since the move here was exaggerated, the fall too is, commensurate here. So So Rainbow Children's and Apollo Hospitals, these are the two stocks that I look for, as a buying opportunity at these levels. As I said, just waiting for the dip to settle, and then perhaps these could be a good short-term trading bets also.
All right.
Yeah. So what do you make of Max? That is the one that has lost the most in the last in yesterday's downturn, and it had risen almost 85% in the last 1 year. Do you think it's a buying opportunity even for Max?
I mean, 8% yesterday,
Yes.
8% today.
Today, yeah.
Kush.
Well, it could very well turn out to be a buying opportunity. It's just that, as you said, the stock had actually risen quite sharply in the last couple of months also, in fact. But here the fall is so sharp that, it's not even seeing any kind of an arrest. The couple of stocks that I mentioned, at least Rainbow, if you see, it has, respected some of its key averages, some of its key support zones. Max really hasn't. And the volumes that you're seeing on this one on the downside are quite heavy. So for me, this could be in, for a bit more pain. Although the stock has recovered from the 706 kind of lows of the day, but here perhaps the fall could probably be a little more, or it could go into a bit of a sideways consolidation mode and then rebound. So Max, I would wait and watch. I would see the kind of moves that the stock is playing out, and I would still suggest that Rainbow and Apollo it would still rank over Max for me. Given the trading setup that I'm seeing on the chart right now.
But Kush, I mean, is there a valuation concern over here? Because I'm looking at the PE of some of these stocks. They are trading at a multiple of 75, 80. And for, just to put in context for our viewers, Nvidia is trading at a PE of 65. I mean, is there a valuation concern?
So, I'm no expert at fundamental analysis, but, the one thing that I've been hearing from my fundamental peers is that the valuations are stretched and everything's looking expensive, but the fact of the matter is that everything's still going up, right? So I think we'll have to learn with high P's as the new normal. So for me, of course, that does remain a concern, but it's not really a stopper, at least from a near to a medium term perspective.
Okay, that's so much about hospitals and the blip there. But what are your picks for the investors today?
A couple of them. From a medium-term perspective, we've got Concore and HFCL that, we've highlighted to our clients also as a part of our advisory service. Both the stocks have seen a fair bit of knocking, but the rebound on them has been encouraging. Both of the stocks have actually, in fact, rebounded from their 20-day moving average. So Concore with a target of 995 and 1010. Stop loss here would be 955. HFCL, this stock too, very similar pattern as I said, rebounding from its 20-day moving average. 111 and 114 are the targets, and 105 is where I would place my stop loss.
All right, Concore and HFCL is where Kush is betting on for the short term. Sir, always a pleasure speaking with you. Appreciate your time and your thoughts. Thank you for joining us here on News 9.
Likewise, and have a great weekend ahead.
But before we wrap things up, let's look at how the markets are doing. And I mean, the recovery is phenomenal. We are moving towards 22,200, just about 9 points shy of it. In fact, we are very close to the day's high as well, 22,200 to 22,100. That has been a a reversal zone for our markets. So keep an eye out on that. I mean, we have reversed course 2 or 3 times, the last couple of weeks. So that is a critical level. So far, the going has been great, at least in context of today's session. Nifty is very close to the day's high. Sensex is also up 0.93%. It has reclaimed 73,000 levels after a gap of nearly 3 sessions. Mid cap and the small cap space, we have been talking about froth building up over there, and I think the chatter is only getting louder because AMFI and SEBI are also turning cautious. They have asked fund managers to limit fund inflows in some of these broader market focused funds and put out relevant disclaimers considering the kind of tremendous run these stocks have seen. But I think the rally, maybe, I mean, we are like, it's too hard to call if it has peaked, but the recovery is certainly there. February was a difficult month for the broader markets. In fact, if you look at the returns on a month-on-month basis, February was in fact a negative month for both mid-cap and the small-cap indices. And the last time we saw a red month for the broader markets was back in October 2023. So clearly, there is caution in the system, but the recovery is there. Mid-cap 100 index is up about 0.6%. Above the 48,600 mark. Small cap index is also up somewhere around 0.6%, and it's back above 16 levels. And volatility, that is also easing nicely. We were above 16 as of Thursday, but we are back knocking at 15 levels as of this morning. India VIX is down 2.5% as of 10:10 a.m. this morning. But that's all we have in this edition of First Take. Keep watching News 9.
Bangalore traffic is an example of something that has gone wrong with our system.
We have more than 50 flyovers in Bangalore city. If flyover is a solution to traffic problem,